Isn't it wild that just a few days ago we were talking about how overvalued Tesla has been fundamentally, right? Not technically speaking, because it's an incredibly hyped up stock, right? With Elon coming back and leaving Doge, the hype started resuming back into Tesla. But we talked about that fundamentally, Tesla stock was not doing well. There's a lot of hype, it's driving the price up, but the hype is most likely going to be short lived when fundamentals come into the mix. And surprise, surprise, exactly what we talked about. It wasn't that we just talked about it because we could predict the future. We were just paying attention to the numbers, right? While everyone off of Reddit or all of these other people are just encouraging you to buy Tesla at a 1.1, $1.3 trillion market cap, have they even taken into consideration to look into the fundamentals of this company? For the fifth consecutive month, Tesla's European sales plunged for the fifth straight month over lingering Musk brand damage. And it's not just Tesla. I'm not going to pretend and just say that it's just Tesla. Its overall EV industry is somewhat slowing down. As again, we talked about this concern as well. Economic issues. Interest rates are relatively pretty high. Right now, a lot of people are very uncertain about what's to come for our economy. Stock markets are at all-time highs, and people think that because that's the case, that everything should be thriving. But think about it. Look at the data. Nothing about our economy is actually thriving. It's not like consumers are overspending. It's not like houses are selling for above ask. Right now, right, based off of the report that we shared earlier today, there are more properties that are being offered to be sold than there are buyers. It is a buyer's market, not a seller's market, meaning that there is so many more sellers than there are buyers when it comes down to even on the real estate side of things. And the car market is even worse, right? People do not want to spend money they do not have. And guess what? Surprise, surprise, a lot of people don't have a lot of money. When looking at Tesla, and if you look into the actual fundamentals of what it is that's been going on overseas, a lot of people were already assuming that the Tesla brand has been damaged and the hit that it took is going to be something that's going to take time for it to recover from. This is something that we talked about months ago, and everyone wants to ignore it. Fundamentally, Tesla sales and Tesla growth and Tesla revenue and Tesla net profits are not growing year after year, and they're definitely not growing quarter after quarter. If you look into the actual numbers, so Tesla's EV registration, a proxy for sales in Europe, fell 27.9% to 13,863 in May compared to a year ago. Meanwhile, overall EV registrations in the region, including UK and European Free Trade Association, rose 25% in May, with overall registrations down 0.6%. So I actually didn't know that. It says overall EV registration has rose 25%, but Tesla sales registrations have fallen 27.9%. So again, it's just Tesla the one that's taking the biggest hit. But I guess that has to do more with sentiment. I would assume that the sentiment, as more time goes on, people will be less inclined to care that much that Elon is the owner of Tesla. I know some people are diehard Tesla haters. Again, I love my Tesla myself, but there's a difference, right? From loving the vehicle that you drive to hating every person who owns a Tesla to just respecting that Tesla as a car company is not growing. And I know what you guys are going to say is that, well, Tesla's not just the car company, right? Tesla has the robotaxi. How is that going on, right? If you guys have looked into the most recent news, there's a reason Tesla stock has been dropping so much recently, and it's because all of the hype of this robotaxi launch, remember, it's just hype. And then they get backed up with when regulators step in, just like Waymo experienced 3 to 5 years ago. Everyone thought that, oh, well, Waymo did it, so Tesla's going to speed right through it. I don't think you understand that, like, every company, to my understanding, has to take time and prove that they can deliver a safe product to that general region. And depending on what region it is that you are trying to deliver that safe product to, in this case, it's in Austin, Texas. This is the robotaxi event. You need to make sure that you do it in a way that is, not of concern to those regulators. And this is what we're beginning to the issue that we're beginning to run into when it comes down to Tesla. This is common sense. It's like, how can you expect that there's not going to be, and I'm not putting all the blame on Tesla, there's always going to be human error. And I used this example months ago when Tesla was hyping up before about the robotaxi event. I remember when Waymo was launching here in Arizona. They were launching mainly in Tempe area. Those vehicles are still not allowed in the city that I live in. Again, there's specific regions that they're closed off with. And I remember that it wasn't the Waymo's fault, but a lady was jaywalking, ran across the street, and got struck by the Waymo. Waymo got shut down for a full year because it went under investigation. In my opinion, again, that is human error. That is not Waymo's fault. If that was a normal person driving that vehicle, they probably would have struck the lady regardless. But again, as you try to implement this new technology, regulators have to make sure that you are delivering a safe product. And when accidents, because that's what it was, happens, just like we expected that it's going to happen with Tesla as well, it's going to draw down the timeline that it's going to take for these vehicles to be allowed and embedded into our day-to-day. And again, this is what Tesla is now beginning to realize, that if you look into the actual fundamentals of this company, remember, we can talk about the Optimus robot. We've been talking about it for the past 5 years. And guess what? Tesla still doesn't offer them, right? Where's my Tesla Roadster? I've had a Tesla Roadster pre-order for almost 10 years. Or what is it? 5 years, 7 years, something like that. The part that's insane about this is that, again, everyone loves to hype up a company and the expectations and the future and the forecast. But then when you really take this into consideration, Tesla is not even delivering in its core business as of right now. How do we expect that if none of its business is actually growing and trading at an insane multiple based off of its current PE ratio, that we expect any of this to get better for Tesla? Tesla right now, again, in my opinion, and I could still expect it for it to consolidate because market conditions are giving it the environment for it to hold and sustain itself at these levels. But Tesla has a long way to go if it does begin to pull on back. It has a big drawdown because fundamentally, Tesla is not doing well as a company. Its sales are down year over year, quarter after quarter, and revenue is down. Tesla is not growing. So again, as they host these different events and it tries to, market these milestones that it's accomplishing, I want to remind you that that hype is always short-lived. And Tesla is a great example of when hype is present, it rockets, but it always corrects itself. It pumps and it always corrects itself. It pumps and it always corrects itself. It pumps and it always corrects itself. And most recently, it pumped, and it wouldn't be much of a surprise based off of previous patterns that eventually it will correct itself. And especially more now than before, because if markets also begin to draw down, that will only further exacerbate Tesla's sell-off as well. So please understand that when I'm talking about Tesla, this isn't to encourage you to sell Tesla if your intention was to invest in it long term, especially if you bought it at $100, $200 per share. The idea that I'm trying to share with you is just to highlight the risk and the uncertainty at these levels, that buying Tesla at $350 per share in the short term, Tesla has a lot to prove and a lot of bumps in the road that it's most likely going to encounter. So do not be surprised if we see a retracement before we begin to recover once again. And again, very simple. Why would you want to overpay for a company right now that you know is more likely to draw down in the up and coming future? Just a simple conversation to have with yourself. The last thing that I want to make sure that you're fully aware of is that tomorrow there is going to be a series of reports that I think that you should be paying attention to. We have PCE prices being released 1 hour before the market opens. And we also have the GDP report being released 1 hour before the market opens. We have initial claims and continuing claims all being reported 1 hour before the market opens. So expect a lot of volatility going into the market open. It's going to be released 1 hour before. So if you see a big gap up or a big gap down, it's most likely one of those reports that was released during that pre-market session. I hope that it earned a thumbs up. Please consider subscribing. I hope to see you for our live trading session tomorrow. And if you want to watch me to tune on in, second link in the description down below, and I'll see you then. Take care, team.